All right, good afternoon. Thank you guys for joining us today. How you guys doing out there? Good evening. My name is Christian Marquez. I'm going to be the moderator for today. We have the privilege of having our Bank of America partners come in and teach our class today. Just kind of want to go over some housekeeping rules. This is a webinar where you are able to write on the chat. Definitely, if you have any questions or anything we're going over and you kind of have a question about, definitely make sure you write in the chat and we'll try to get it answered as soon as possible. Again, we do have a Q&A at the end. So definitely if you are more of a shy person or just kind of want to let us know at the end, we definitely will have a Q&A at the end. Also just be aware that you are not able to be on the camera. So, that's good for you guys, but thank you for joining us and we're going to start shortly. Okay. Again, my name is Christian. I'm the counselor, one of the 3 counselors here at Dallas Habitat. And so I'm happy you guys enjoying. I see some familiar faces, some familiar names. So without further ado, let me introduce you to Ms. Melissa Lopez with Bank of America.
Thank you very much, Christian. Hello, everybody. As you mentioned, my name is Melissa Lopez with Bank of America. My NMLS number is 618962. I'm a community lending officer with the bank. I've been in the business for 13 years. My focus has always been on purchase, and within the last 2 years, it has definitely been on education with regards to home ownership and ensuring that our buyers are prepared. So we'll go ahead and get started. There will be a Q&A at the end, as Christian mentioned. But if there is anything that you want to ask while I am on a slide, definitely feel free to do so. I want this to feel more like of a conversation and definitely want everyone to be engaged. So we'll go ahead and start. Is buying a home right for you? There are a lot of things to consider when it comes to purchasing a home. In this slide that we're going to go through, we're going to look at things to prepare for as far as down payment and financing. Of course, whenever you look at home ownership, there's going to be a potential increase in your living expenses. So one of the sites that Bank of America offers that you see on the right side is bettermoneyhabits.com. It's a great website to get started with to kind of help you further deepen your understanding of what you're going to be needing. It's always important to keep in mind that you're going to need to save money for down payment, closing costs, and any additional upfront fees. And we'll go over those as we get further into the slide. Next slide. So preparing for home ownership is definitely something that is going to be a huge commitment on your part. Of course, you have to make sure that your credit is taken care of. You're going to have to make sure that the funds are taken care of. And it's not just credit score, it's also credit history. What my focus is going to be on this call today is our very last bullet point, establishing how much you'll need for your upfront closing costs, as well as loan types, how your principal, interest, taxes, and insurance are calculated. And then, of course, give you additional resources to ensure that you have links to stay informed. So a lot of people have a huge misconception when it comes to down payment that you need 20% or more. There are actually loan options that start with a down payment of 3%, and closing costs tend to typically be 2 to 5% of your loan amount. I will let you know when it comes to figuring how much money you need, everything is calculated on a percentage. So when we go through a Q&A, I can give y'all the quick breakdown of how that math is, so you're always prepared on what you'll need. Next slide. So how your payment is calculated. Your monthly payment is very similar to what you pay in rent. So let's say your rent's $1,200. You could have a mortgage payment for $1,200 as well, but the difference is how that $1,200 is broken down. It's going to be broken down with principal, interest, taxes, and insurance. Your principal and interest payments are always going to be calculated based on your purchase price and the financed amount. Once we subtract your down payment from your purchase price, your financed amount with your interest rate is going to give you your principal and interest payment. Your property taxes, though, and your homeowner's insurance are actually numbers that the bank or your lender will get from outside sources. Your property taxes are always going to be determined by the county that you purchase your house in. And your homeowner's insurance is actually going to be determined by you. You have the ability to structure your own homeowner's insurance policy. As long as you meet state minimum coverage for the home, the bank will accept that as your policy. But of course, if you want additional coverages, you could do that as well. Those four things are going to be your principal, interest, taxes, and insurance payment. Next slide. How we calculate how much house you can afford is also going to be determined by the monthly payment. In any lending situation, we always take your gross income times 28% to estimate the monthly payment that fits your budget. Always keep in mind when purchasing a home that a lender can only see your monthly payments that are reported on credit. Of course, everybody has outside expenses. You have utilities, you have cell phones, you have cable services. So we like to make sure we don't exceed anything that's going to put you in the negative when becoming a homeowner. So be very open with your lender in what your comfortable monthly payment is, because again, we can only see what reports on credit. So having those open lines of communication is very important, but the calculation itself is pretty simple up front. Next slide. So saving for your goal. As I mentioned, when it comes to actual closing costs and down payment, it is all based on percentages. Bank of America and our mobile apps can actually help you set up goals to move money over monthly to save. It can give you a personalized picture of how much you're going to want to save. Also, I have a website, and every loan officer has a website, that's with Bank of America, that gives you the accessibility to manage and determine how much you're actually going to need for the loan. You can go through our mobile banking app, or you can just search bankofamerica.com, home loans, and it gives you the accessibility to know what you need to save. There are free online tools that are accessible to you, so we can look at that at the end as well if you would like. Next slide. Getting pre-qualified. As many of you have probably been told by realtors that you reached out to, family, friends that you've had conversations with, or people that you've known that have recently purchased a home, it is very important before you start looking for a home for you to speak to a lender to get pre-qualified. In the pre-qualification process, the lender does review your income, assets, and your liabilities, which are your debts that report on credit. Most real estate agents will not even show you a property without being pre-qualified, and you definitely cannot submit an offer to purchase a home without being pre-qualified. I can help you get pre-qualified in person or over the phone, or get you pre-qualified from a computer or a mobile device through the Bank of America digital mortgage experience. It is something that we offer. And since I am a local loan officer, definitely meeting in person is something that we could easily get scheduled via my website. But this is the very first, very important step that you have to take in order to start your home buying process. Next slide. So when you apply for a loan and you do schedule your appointment to meet with a mortgage loan officer, it's very important to have the needed documentation to support the information provided on your digital mortgage app. Those documents are listed on this slide. They are going to want 30-day pay stubs showing your year-to-date income, W-2s for the most recent 2 years, signed personal and business tax returns if you are self-employed. When you are self-employed, it's always important to know that the bank calculates your income based on what was reported after your deductions. So that's very, very important. It's after deductions is the amount of income that we use when you're self-employed. When you're a W-2 employee, whether it's hourly or salary, it's always set and it's always averaged. So we use the income that's reported by the employer. Then once you do find a property, we'll ask for a copy of the purchase contract. If you bank with Bank of America, we have the accessibility to pull your 2-month bank statements or any additional investment accounts you have with us. If you do happen to bank with an outside institution, of course, you would provide that information to us. Next slide. One of the great things that Bank of America is offering, we made a $15 billion commitment 2 years ago to help people become homeowners. It is a part of our community homeownership commitment. The way our grant money breaks down of that $15 billion is the America's Home Grant Program, which offers up to $7,500 in closing cost help, and a down payment grant, which offers up to $10,000 or 3% of the purchase price. Now, if you remember in the previous slide, I did mention that one of the down payments can be at 3%. So the advantage to that is using Bank of America as your lender, essentially, we could pay your down payment in full. Next slide. Now, understanding how your down payment and cost savings programs work. There are so many opportunities to have additional resources when it comes to down payment, when it comes to closing costs. But how it works for us, Bank of America clients have, there's so many programs of home ownership and affordable. So the down payment and closing cost programs are created, they're offered by state and by local housing agencies. Also, nonprofit organizations and employers can also be compatible with FHA, VA, and conventional loans. Most of these institutions outside of what Bank of America can offer will give down payment closing cost assistance. They may also give you money towards your down payment or monthly payment assistance. We also work with additional programs in conjunction with our grant that can help subsidize your income. And of course, with that, it would help increase the purchase price of your home. And there is also, if you're a first-time home buyer, there are some special classes and perks that you could take outside of what Bank of America is offering. Next slide. So this is going to be specific information for Bank of America's grant program. Now, the down payment grant program is a part, again, of the community homeownership commitment to first-time homeowners and qualifying home buyers in eligible communities. Again, it's 3% of the purchase price up to $10,000. You cannot exceed a 20% down payment when you do utilize the down payment grant. Essentially, most people will just do the 3% down payment and have the bank's grant cover it. But if not, if you have money that you've saved, you can use your funds and our funds together. We do require a homebuyer education course to receive our grant money. And of course, Bank of America does also provide you a letter of understanding to ensure you understand the funds that you're receiving are true grant money. And we do always pair our grant product with a great loan option for you, just to make sure that we're offering you everything that benefits you over a 30-year mortgage. Next slide. Now, the America's Home Grant Program is our closing costs grant, also a part of our community homeownership commitment. This is $7,500 towards non-recurring closing costs. Now, what I mean by non-recurring is going to be something that you will not have to pay post-closing. One thing that you do pay at closing and also pay every year after are your property taxes and your homeowner's insurance. Those two initial amounts to establish your escrow account will not be allowed to have the $7,500 credit towards. However, any lender fees, third-party fees to include title can be paid by the $7,500 closing cost grant that Bank of America offers. Now, this does not require a homebuyer education course to receive, but it also does not allow you to exceed the 20% down payment as well. And you do still receive a letter of understanding, and it can be used with any of Bank of America First Loan products that we offer. So of course, your loan officer would go through your options with you, let you know what your eligibility is for down payment and for closing costs. And then of course, if you wanted to contribute any of the additional funds that you've saved, you also have the ability to do so. Next slide. So layering solutions to maximize your benefits. When you put your closing costs and your down payment grant together, dependent on your loan amount, you could receive up to $17,500. Now, as I mentioned previously, we do our best to structure every loan that is grant eligible with a 3% down payment to, of course, maximize the savings when you purchase your home. You can visit the Bank of America Down Payment Center to get more information on the state requirements and also the county income limit, or you could just ask me. Next slide. So low down payment for mortgage. We offer a Freddie Mac Home Possible loan product that starts at a 3% down payment. This is a conventional loan product. The best thing about this product is that we have paired it perfectly with the grant, as I mentioned, to where Bank of America essentially will cover your full down payment. Now, with the Freddie Mac Home Possible, there are some income limits that do vary by location. So it is important that if this is a product that you're wanting to pursue, and also the grant is something you want to pursue, it's definitely important to connect with a loan officer, whether it be myself or one within Bank of America, to just ensure that you meet those income limits and you shop within those areas that fit you the best. Next slide. The mortgage options. There are so many options when it comes to lending. There are fixed rate mortgage and adjustable rate mortgage. A fixed rate mortgage is going to give you the same rate from your first payment to your last payment. An adjustable rate mortgage will have a fixed interest rate period that could be from 5, 7 to 10 years. This product is usually good for people who tend to relocate, whether based on employment or if they're in a military service and they don't want to utilize their VA. If you know that you're not going to be in a home for 30 years, it may be one of the better options for you. However, after that 5, 7, or 10-year period, your interest rate does increase based on current market rates. Now, there are different loan products as well. Conventional loans do have set loan limits. Bank of America offers not only conforming loan products, but non-conforming, which are considered jumbo products, which is for your higher loan amount. There is also the Federal Housing Administration, which is your FHA loan. That loan is very popular for first-time home buyers. It does give you a lower down payment of 3.5%. You also have the ability to use gift funds for down payment if you're not going to be utilizing any additional down payment services. It does give you higher loan limits, and it does have very flexible guidelines. Outside of that, there's also VA loans for our military active duty or veterans, and also active duty or veteran spouses. Another part that's great about the VA is it has fixed interest rates, and sometimes you are able to waive your upfront funding fee. Next slide. So the home loan process has many steps to it. We've broken them out in 5 very condensed steps just to kind of help you see the picture from beginning to end. Your step one, as I mentioned, is important because you are going to want to get pre-qualified. So connecting with the lender, reviewing your loan options, providing those upfront documents so that you're able to know what you're getting into. It's very important to understand your payment and how everything is going to work from beginning to end. Another option that you do have after you get pre-qualified is submitting your loan to an underwriter. The best part about this part, step two, especially in the current environment that we are in, is that it'll help you jump to step three, which is a conditional approval. What happens between step two and step three is you will work with your loan officer and the documentations that you've provided to actually have an underwriter review your loan without needing a purchase contract. This will give you leverage when submitting when submitting a purchase contract, because your letter to the seller will not just say that you've been pre-qualified, it'll actually say that you've been approved. Having an approval lets a seller know that the bank has already confirmed your employment, your credit, your assets, your debts, and your income, and that we will lend to you based on the information that you have provided. And that's a step that you can definitely pursue with us to have that extra strong standing with a pre-approval letter. Of course, your final step is you do have to find a property that we will lend on. Even though you may be approved, it doesn't mean the property meets the criteria of what we've agreed upon as far as the loan is concerned. There are a lot of properties right now that could be considered an investment, or maybe some that need to be rehabbed. Those are completely different loans, and a whole other probably slideshow that we would need to go over those. But definitely finding a property that meets our property guidelines is going to be your step four. Once you do meet and find that perfect first-time home for you, then we'll get to closing. And once we move you over to closing, everything about the home is going to get confirmed. We do confirm with the county what your property taxes are going to be. You will secure your homeowner's insurance policy. We will review any down payment and closing cost assistance with you that you're eligible to receive. And then, of course, we will recommit your loan with the property address, lock in your interest rate, order your appraisal, and then move you on to closing once we've reached our contract end date. So pretty simple steps. I know it sounds like a lot, but once you actually get the process started, it's pretty seamless from beginning to end. Next slide. So there are definitely many, many resources that Bank of America offers you. It is important for you can download our app. You can just Google, you could even Google me if you wanted to. Melissa Lopez with Bank of America. Pull up my website. There are going to be tabs on the left side and on the bottom side of any loan officer site. This mortgage calculator is actually an amazing tool that helps you kind of see where you're going to be monthly, just to give you that upfront understanding on where you're comfortable. It's important when you have a conversation with the loan officer to have already kind of set your budget on where you want to be monthly. And this calculator, based on homes that you're currently searching, will help you to have that very productive conversation and have that information in your mind of what you're going to be looking to spend on a payment for the purchase price that you want. Next slide. So closing your loan and what to expect. So you do receive a closing disclosure from Bank of America. Every time your loan is touched, anything that changes from beginning to end, you will always receive a document from us. You're going to receive a loan estimate up front initially, and as we get closer to closing, you're going to receive a closing disclosure. It's very important that you review any and all documents that you're given, because we want you to understand what changes. So if your property taxes change from what we estimated versus what the county confirms, you will receive a disclosure. Always, always ask questions. There is never a stupid question in the home buying process. You are committing to spend hundreds of thousands of dollars. Every question you have definitely has an answer. Next question. I'm sorry, next slide. So you're closing your loan and what to expect. So your lender's responsibility. As your lender, they're going to have to make sure that you receive any closing disclosure 3 days before closing. This gives you the ability to know what to expect as far as amount is concerned, to get your time and date scheduled with the title company. It also gives you the ability to get your wire sent over for closing. And then, or you could do a certified check, whatever you're wanting to do. It also gives us the time to go over your escrow account and how that's being set up. So I've said escrow a couple of times, and I'm not sure if everybody knows exactly what that is. So your escrow is going to be like a savings account that the bank holds on your behalf. Every month when you make your monthly mortgage payment, it will be split out, as I mentioned previously, for principal, interest, taxes, and insurance. We take your property taxes and your homeowner's insurance, and we drop it into your escrow account. We hold those funds for you until the county invoices us for your property taxes and until your insurance company invoices us for your renewal. So it's important when you make your payment monthly that you understand how that splits. At any time, though, it's important to know that the county can reassess your taxes, and we would have to increase what we're collecting. Or if you renegotiate your homeowner's policy, it's important to let your lender know so they can adjust what needs to be collected if that policy goes up or down. Next slide. So how can I help? As your lending specialist, I'm available every step of the way. It is my mission to make sure I educate as much as possible. Buying a home definitely starts the process for generational wealth. When you become a homeowner, people around you want to become homeowners, your friends, your family, your children. It starts a domino effect of positivity. So I am here to help with whatever you need in any way, shape, or form. I can even tell you post-closing, I have clients come to my office and we talk about how to file their homestead exemption. So it's definitely a partnership in making sure that you are successful in this journey. So feel free to contact me, schedule with me, so we can have those one-on-one conversations. In the next couple of slides, we're going to start to see resources. So definitely feel free to take screenshots or jot those down. But anything that I can do to help in the home buying process, definitely let me know. We can go to the next slide. So keep learning. So Better Money Habits is a website that I mentioned up front initially. It has, as you can see to the right side, so many different tabs as far as your home equity is concerned, how to manage your mortgage, the mortgage process, moving, because there are a lot of moving parts in buying a home. So the more education you have, the better off that you are. Knowing your mortgage options, setting up your automatic payments, all those things are accessible to you on how to in our homeowners guide for Better Money Habits. Next slide. Another thing that Bank of America offers is a first-time homebuyer online education series. You can subscribe. This page just kind of gives you an overview on how you do it. There is a language preference. We offer everything education in English and Spanish. There are videos that will come out. There's email alerts that you'll receive, education seminars that will come out to you via email. You can also get more information about our grant and just overall knowledge about the mortgage closing process. Next slide. Bank of America also has a real estate center. So again, additional information on every loan officer's website. The real estate center is actually going to be located on the bottom of our website when you go to visit our online access. This allows you to actually search properties within the active MLS that are grant eligible. On any listing, you can see this red tag to the left. The red tag will actually let you know what the property's income limit is. As I mentioned, per county, income limits do vary. If you do decide to utilize Bank of America's website to search homes, it will let you know what the income limit is. If that meets the income limit and that's a property you're interested in, definitely reach out to us, because that would let you know you are going to be eligible for a grant, as long as we can get you approved for financing. Next slide. So additional information on the resources that you can find on our Bank of America website. Obviously, the mortgage calculator that we previously saw, additional resources in the Better Money Habit, and then our Home Outlook newsletter. That can be emailed to you. As long as you enter in your information and you give us consent, we will send you as much content as you want to receive. Next slide. This is a page that I mentioned about the additional resources. As a buyer, there is going to be so much information for you to have accessibility to and for you to retain. Bank of America has so much of it on our website, whether it's through the loan officer portal or just the generic Bank of America website. There's so much accessibility to content. Always, again, for any reason, feel free to reach out to me or any of my additional community lending officers. You can always Google via your zip code to see who's the closest to you to connect. A lot of us are already back in office, so you do have that in-person ability to have a face-to-face conversation. You can always schedule an appointment via somebody's website to communicate over the phone, or if email is something that you prefer, you can also connect to us via email. Next slide. So that's me. I know y'all can't see me on Zoom. Bank of America, for whatever reason, doesn't allow us. But that's me, a community lending officer. As I mentioned, I've done this for 13 years. I've been 2 years predominantly in the Oak Cliff community and within the southern sector. And one of my achievements that I've made since joining Bank of America has been a President's Club member. So that is something I am very, very proud of. And I couldn't do it without helping people like you achieve their dream of homeownership. So Christian, if we have any questions, we can definitely take those now.
Hey, Melissa, yes. So one question people have is pretty much how much do I need to have saved in my account, right? You know, I'm looking at being a homeowner and I want to get into it. So how much do I really need to be saving for a home if I'm looking in the open market?
Okay, so one of the things that I mentioned is everything is based on percentage. For simple math, let's say you're looking at a house for $250,000. You take your $250,000 purchase price and you're going to multiply that by your minimum down payment. Let's go ahead and say your goal is to save a minimum of that 3%. So you'll use your 3% on your calculator, you'll hit 3, you literally hit the percent sign, and it will give you what that down payment is. So it's all going to be dependent on your purchase price. You did $250 times 3%, it's around $7,500. Obviously, if you're looking to use any type of down payment assistance, that amount could substantially go down. Ideally, you will want to save at least 3%. Now, the better part is, in most lending situations, you can save your own money. A lot of people around this time of year use their tax refunds for down payment. You can receive a gift from a family member. You can take money from your 401k, or you can just save from your own funds. So I hope that math equation was helpful.
Yes, for sure, Melissa. And we actually have another question. Someone mentioned if they already have a pre-approval, is it better to do the process twice and go through like another lender? For example, like let's say they have Chase or Wells Fargo and now they're interested maybe with what Bank of America has to offer with the savings programs. What do you have to say about that for pre-approvals?
Yeah, absolutely. Absolutely. Know your options. Even if I pre-qualify somebody and I offer them the full 17,000 in grant money, I encourage them to shop. This is a commitment that you're making probably for the next 30 years. And like I mentioned, you're asking for hundreds of thousands of dollars. You want to make sure you're getting the best rate at the best cost and at the best savings. I'll be the first to admit if another lender is giving you a better offer than me, because it's, at the end of the day, it's about sustainability. We want to make sure we're setting you up for the best possible outcome. So even though you have been pre-approved and you've gone through that process, the best part about it is you know exactly what the other lender is going to need. So it'll be super easy to get that pre-approval done again. There are some loan officers who will ask to pull your credit. I will be the first to let you know for a quote. They don't have to do that. And maybe I'm telling trade secrets here, but they don't need to pull your credit for a quote. Now, if you want an accurate loan estimate, they do. But if you just want to run numbers and check with the lender to see if you are getting the best deal, you can give them your purchase price, your credit score. You've probably already received that from the current lender that pre-approved you, and then the term that you're looking for, and they should be able to give you some numbers. Or
Awesome.
I could do it for you.
Yeah, appreciate it. Awesome. Yeah,
you can reach out to me and I can let you know.
All right, Melissa. And we also here at Dallas Habitat, we do recommend that you guys do reach out to 3 or more lenders at least. And if they are doing a hard pull, because it is a mortgage loan, usually you can get it pulled in 30 days. It will only be in your report once. So that's the best practice we recommend. That's kind of a gem we dropped here and there. So yeah, it's definitely if you guys are getting pre-approvals, you do want to shop around, and like Melissa mentioned, you want to get the loan estimates, which is a lot of like the closing costs, how much you bring to closing and how much you have to bring to sign at signing. So those are the things that we want to make sure that you guys are aware of, and we're comparing apples to apples. And you'd be surprised, sometimes you might be happy with one lender that's giving you more money, but is the interest rate higher? So there are things that here at That's Habitat with our counselors, that we sit down with our clients and discuss the options that each one might give you. And of course, another thing might be that you might like the way, Melissa takes care of you compared to someone at another bank, right? Or if you have a lender that's not responsive or just ignoring you, sometimes people go with the person that's giving that good customer experience compared to the person that's not. So that's a great question. So I appreciate that information, Melissa. Are student loans counted when it comes to, if you're not paying on them towards, like, I'm assuming the back end ratio?
Correct. So student loans are counted. The best thing that you're going to want to do, I know with everything going on recently, student loans have been auto deferred, whether you wanted them to or not, which has been a saving grace in most situations. When it comes to buying a house, however, you do need an income-based repayment schedule, just so we can use that payment towards your debt to income ratio. Usually, the provider of the student loan will have a calculator on their website that you could go into and calculate what that payment's going to be. If not, I can only speak on Bank of America, but if you are not able to get that document, we actually use 1.15% of the total student loan principal balance to estimate your monthly payment. So in some situations, I've seen that to completely disqualify somebody, depending on what their major was and how long they had been in school. But most of it can be resolved with getting that income-based repayment letter.
Awesome. Thank you for answering that. And I think we're gonna finish with this last question. So what feedback would you have for someone that's, looking at pre-approval? You deal with clients in and day out. What is your best advice, or you wish people knew before they came to see you about, the home buying process?
So one of the things that I wish people knew is that there's no stupid question.
Yes.
I get people that come and schedule appointments with me, and they're so hesitant to ask me anything. And I enjoy, having, like I mentioned in the beginning, more like of a conversation. So be prepared. I mean, like I said, there's no stupid question. This is all very new. The loan officer, whether it's me or somebody else, is going to understand, even though we do this every day, you don't do this every day. So utilize who you're working with and the knowledge that they have to help you make the best decision possible in pursuing homeownership. So that would be my thing. The one thing everybody needs to know is there is no stupid question. Come in, and if you have to ask the same question twice till you understand the answer, do it. Just, feel comfortable in the decision that you're about to make. Definitely.
Awesome. No, thank you so much, Melissa. It's been a pleasure having you on. With that being said, I just want to kind of let you guys know in final remarks. This is Melissa Lopez with Bank of America. She's part of the lending community team there. Also want to let you guys know that Habitat is celebrating financial literacy next month for the month of April. So definitely check out our website and be aware of all the stuff we have going on the upcoming week. We'll have stuff throughout the whole day from Monday to Friday. So definitely check us out, and I hope you guys can attend. And Melissa, thank you so much. And I hope you guys have a good afternoon.
Awesome. Thank you.